Good morning, this is Whistleblower with another smart profit maximizing moment. Apologize for missing a couple days. I was out of town and then came back into town yesterday, and you know how that goes. Everybody needed to talk to me. Today we're going to talk about, some of the recent developments on various COVID-19 related loans and payroll tax credits, okay? I've been walking down here. The biggest one people have heard about is the forgiveness of PPP. PPP is the Payroll Protection Program, where you have, just to refresh your memory, the bank lends you the money with the SBA backing. Once you get the loan, you have 8 weeks to spend it on, the things you're supposed to. Payroll, 75% on payroll, 25% or more. When I say 75%, it can be more. On payroll, at least 75% is a more accurate way to say it. Other things that can be covered: rent, mortgage interest if you own the building, utilities, and that's what we're going to talk about. Some of the questions I had, and we're still, and I'll be honest, like I said, I was on the road, and then yesterday was busy, so the last time I checked this was Friday. Today's Wednesday, but I think I would have seen it. But I had a conversation with a banker who does a lot of this SBA stuff, and he's always talking to the local SBA office. And we had some questions like, what is included in internet? I mean, what's included in utilities? Is it just traditional utilities, gas, electric, water? He's under the impression, and I tend to agree, that telephone and internet seems to be covered by that. Now, we're still waiting for final regulations from the SBA. When I get them, I'll update you if I'm wrong. Okay. Pensions, we had to talk about that. So like if you fund the 401k for you and your employees, or the employees that were on the PPP loan, you think about it, you took your payroll, added your pensions, added health insurance, added other stuff, the Texas Workforce Commission, divided by 12, multiplied times 2.5. All right. Why then did they allow you to only take 8 weeks, which is only 2 months, basically, a little less than 2 months, all right? Well, it's because of the other things that are going to be in there. So one of them was pensions, all right? If you put your pensions in, the question is, well, what if I don't pay my pension until when my tax return's due in September or October? Do I get to take a portion of it during this 8-week time period? Or on the other side, what if I put I make my whole 401k match or my whole set payment in this 8-week period? Do I get to count it all? We're kind of thinking, truthfully, no. You're probably going to want to take 2/12 of whatever you were planning on doing and actually make that payment in this 8-week period. So if you're planning on putting $60,000, just to use the number, and in a SEP in October or in September, when your corporate tax return is due with extensions, probably take 60,000 divided by 12 is 5,000 times 2, 10,000, make a $10,000 payment inside this 8-week period. Also, some confusion on this. If you didn't have a pension last year, can you do one this year? Kind of leaning towards probably not. I mean, we're waiting, like I said, for some guidance. So if you didn't have it there, you're probably not. One thing for sure, bonuses will not count. You cannot bonus yourself to forgive it. Okay? It's your normal payroll. Remember what this thing is: Payroll Protection Program. All right? Which leads me to the next thing. Yes, you can hire people. All right? If you need to. All right? Let's say you got a large contract or a large job, or you've been talking about bringing somebody in. You can bring them in if you need them for this time period. Another thing that came up is whether, the law said the PPP loans, if forgiven, were not taxable. All right. The IRS is and understand this, when laws are passed, they're not final. They're open to interpretation by the IRS. So they put out regulations. One of their regulations said, yes, the wages, the PPP loan is not taxable, but we're not going to let you deduct any of the stuff you pay with it, like the wages, like rent, like utilities. Now, that's normal. That's the way they interpret it, and then it's still not settled law, because it can go to court, and somebody can argue that wasn't the intent, which is exactly what's happening right now, not going to law. But there's already been a few senators, both on the Democratic side and the Republican side, saying that is not what we intended. We did not intend to help business owners and then have them have to turn around and pay taxes on what we helped them with. So it sounds like there's a decent chance of what's called a technical correction. That happens all the time. Matter of fact, in one of the COVID bills, they did a technical correction of on something I'm not going to get into details, on the 2008 tax change. So quite possibly, we're going to get more guidance, or possibly, and IRS even said if that wasn't what you intended, Congress should pass a bill addressing it. So I think you need to keep your eyes open on this one, and your tax person really needs to keep their eyes open on it. EIDL regulations, that's economic injury disaster loans. They're starting to come. If you put your application in when it first came out, I had put the website in one of my videos with early April when this first came out. The SBA was concentrating on PPP loans, but I'm starting to see people that are getting applications, including myself. I put one in there. Now, that's the one, so you remember, that said you can get $10,000. And they came back quickly and said, well, no, too much demand. We're going to basically make it $1,000 per employee, all right? But this is a real loan. It's 30-year fixed at 3.75%. They contact you with an email, so keep your eyes open if you put your application in saying, from the SBA, this is how much you're tentatively approved for. And then they ask you a few updates. And understand, though, you're not approved just because you go through that. It still has to be reviewed. It is somewhat credit-based and, need-based. The questions I had, well, I'll take the maximum $2 million. I had somebody tell me this, I'll take the maximum $2 million and I'll refinance all my properties and I'll come out ahead. No, they won't let you refinance. The intent really is to cover about 6 months of working capital, is really kind of what it's designed to do. And that's, your overhead, your wages, your rent, your utilities, whatever else you might have, okay? Your normal overhead. Now, can you get wages if you get the PPP loan? No, yes and no, all right? If it's to cover 6 months, but 2 months is covered by the PPP, you can get the 4 months that are not covered by that time period in that calculation. Still working that out because these are new, and I literally have, reading what I'm hearing on their website and other people that are familiar with it and the applications that are coming out. Employee retention credit. IRS again has decided that Congress said you can get a credit for up to 50% of the first $10,000 in wages. I'm going to give it real brief. I did a video on this, so if you want to see it, go get it. This is the EIDL loans. This is the employee retention credit. It's too many things. Got confused there for a minute. This is the one, like I said, if you were closed down partially or all because of a government ruling, or you had more than a 50% drop in income, you qualify for this between now and the end of the year. And it's 50%, you can get a refundable credit of 50% of the wages for the first $10,000 per employee. So if I have 5 employees, let's make it math simple. If I have 6 employees, I was shut, or I was, like a restaurant that could only do drive-through, or business that, I was open, but nobody was buying. So my income from like say the second quarter of 2020 to the second quarter of 2019 was down more than 50%. Once I start paying my employees, if I have 6 employees, and let's say they all $1,000 or more, that's $60,000. That qualified wages here times 50% is a $30,000 credit. Now that reduces what you need to pay in for payroll taxes, and the excess is refundable. Well, the IRS has decided that obviously Congress meant to exclude family businesses. I don't believe that's what they intended. So what they're saying is the definition of employees does not include the owner or anybody related to the owner, either above fathers, grandparents, or below children, grandparents, or sideways, brothers, sisters, brother-in-law, sister-in-law, things like that. Again, this is not, in my opinion, in the spirit of the law. There's no way Congress intended to ignore family-owned businesses. So I think you're going to see court cases. You may see a technical correction. The IRS is, as usual, Congress gives with one hand, they're trying to take back with the other. I think we're going to see some action in this front. It's not getting as much publicity because the PPP loans are what's grabbing all the oxygen, but these are going to start, being more and more prevalent. Another thing to watch out for is whistleblower lawsuits on PPP loans. These are usually for grants and things like that the government gives, and an employee or somebody can say, well, it's being misused. And it's got a name, and I forgot it, and I didn't happen to bring it with me, but I'll cover it again. There's a very good chance that what used to be called the Lincoln Law, or still is, kind of referred to that, but it's got another term. There's a very good chance that the PPP loans will be covered under that. And there's a very good chance that banks in particular are going to be looking at these loans pretty closely to make sure they were used to protect payroll. So make sure. One way to protect yourself is when you're putting together your forgiveness package, hire somebody to help you. That gives you another layer of protection, saying, well, I hired somebody. It's kind of like doing a tax return. You're liable, but you won't be hit with fraud, or even sometimes negligent penalties. If you say, look, I hired a professional and I trust them. I think you need to take that kind of level of care with these PPP loans, because bank fraud is serious. All right, and you need to make sure you're doing what you're supposed to. And if you have any questions, you need to make sure you call your banker. They may not give you great advice. Some of them are up to speed, some may not be. Your tax person, shoot me a line if, can I use the PPP loans for this? Be careful. Yeah, that's what I'm basically trying to say here. I know that was a lot to cover, but there's been a lot of updates, and this is going to be an ever-changing, look, they passed the bill on April 3rd. It's May 13th. We're not talking about a long time ago. And a lot's happened in our world. It's like moving very, very fast. And that's not how tax laws and things like this usually move. So expect changes, and I'll try to update you when we get a few of them as we go, or if something major happens. Hey, until next time, this is Wayne Belial saying, let's make this our most profitable year ever. Thank you very much.